everybody to Gary's Traders Group. This is Tuesday, September the 2nd at 7 p.m. Eastern Standard Time. I want to welcome everybody to the inaugural Traders Group that we did a couple of years ago and had a lot of success in. We had a lot of fun. It was educational as well as collaborative, where we all exchanged ideas, and I think we learned a lot from each other. So I want to welcome everybody to this. It should last for about an hour. It will be recorded. That way it'll be available for people to review later on, as well as I'm going to send an email with an Excel sheet that recaps all the trades that I'm going to talk about this evening, you know, with the different strike prices and target prices and so forth. So that way you don't have to jot things down. You can just kind of pay attention. At any time, please feel free to chat in the chat box. I will try to monitor it and answer questions as they go on. But I do kind of have a format of what I go through here. And the first thing is to get through this disclaimer real quick. This webinar is for educational purposes only. I am not a licensed representative giving any trading advice. Trading does involve risk. Do consult with whoever you need to before making a trading decision. Hopefully this webinar is to educate you, help you in those trading decisions. Okay, with that said, let me exit out of this and bring up a chart of the macro picture, which is kind of what I like to start out with, kind of showing the big overall picture. And can everybody see this, by the way? Go ahead and type in that you can. That way I know that everybody is seeing the screen well. Okay. All right. This is I like to go through the macro picture down to the micro picture of what's happening this week, the things that we need to be aware of. But this is on the left. This is the Dow Jones on a daily chart, and in the middle is the S&P 500, and on the end here is the Nasdaq. So what I've done is put you know, Fibonacci retracements as well as extensions and linear regression lines, and I can kind of shrink this on the Dow a little bit, and you could see we kind of had a nice dip to the bottom. You know, I mean, everything is pointing upwards in regards to the direction of price movement, and I believe as long as like one of our guests who's on board has shared with me, and I've asked him many times, you know, where is the market going? You know, can you hear things, by the way, everybody? Does everybody hear me? Hello? Okay. All right. Bob, I think that's on your end. If you can't hear me, then you need to probably call back in, or perhaps enable your PIN number in order to be able to hear things if you've called in. Okay? All right, so the audio is fine. Good. Because this is being recorded, and I want to make sure people hear me. So somebody said it's probably going to the moon. And you know what? There's a little bit of truth to that, because as long as the government continues to spend money, and it's going into somebody's pocket, and earnings, you know, I mean, if you really look at what drives the market, it's earnings and dividends. And, you know, the companies that are producing and making good products, they continue to produce great earnings and great forward guidance that keep making money. I mean, look at Priceline and Netflix and Apple and, you know, all the big boys out there. They complete, you know, making hand over fist and money and continue to grow. So, you know, I believe, and I showed a chart of this last year, and I was looking for it to try to bring it up to you. And really kind of bring this point home without belaboring it. But the Dow is really, when you look at 100-year history and where the PE is right now, which is about 17, the Dow has ranged from, you know, like 7 all the way into the, you know, to the 44, with the norm being around 14, 15, 16, but not really being overbought until it's in its low 20s. So I believe this market will continue to go. We'll see these typical fluctuations up and down, but just like this chart here on the left shows, in the overall picture, we're still going up. guys. So I think that is the trend. Now, you can see the different points where there potentially would be resistance on the Dow. But one of the things I've learned about this particular indicator as well as this one, as long as this looks like an alligator mouth, you stay in the trade, or it still means it's bullish. You can kind of see it's an alligator mouth, and things continue to point upwards. There's an 8 EMA on here, and as long as price stays above that, doesn't bust below the 21 EMA, you could see it bounced and moved back up. Now, we may have a little pullback, but I believe this market will continue to go up. Another thing I want to show that drives this point home is the Dow Jones on Best Choice. And I believe this is 42 years worth of history. And I've highlighted this first beginning part of September, and you can see out of 42 trades, I mean, it's still 50-50, you could say, but it does go historically up in the first part of September. And if you create pretty much any kind of list with any kind of conditions on Best Choice, you're going to see that primarily the beginning of the month is bullish, and towards the end of the month is bearish. As you can see this, it's short, 67% probability. So again, that's what history is telling us, and so those may be some short-term fluctuations that we're of course going to see in this market as it continues to go up. So it could retrace, then go back up. This is very, very common of what happens in the market. Okay, I want to go to the micro picture now and look at what is happening in the market this week that we need to be aware of. There's some reports coming out. There's the jobless claims on Thursday as well as unemployment situation on Friday. But all indicators are saying that employment's going to go down, jobless claims are going to go down, and it's going to be positive information. I mean, that's the consensus out there. Sure, we could have any surprises, but this is the consensus of what's going to happen. But do keep in mind, if you're going to be entering a position or exiting a position, these types of events will move the market. Sometimes it's pre-built in, but generally speaking, there will be a hiccup, which could adversely affect you if you're getting out of a position or entering a position. So just always be aware and pull up a calendar. This happens to be on a Bloomberg's calendar, but you can pull it up on Thinkorswim or many other locations. So that is the micro picture of what is going to be happening this week. Okay, let's go ahead and get right into some what I've spent a whole bunch of time on, and that's for we have earnings coming up starting in September and October. There isn't a lot of great earnings in September. The majority happens to be in October. But there are some things that we want to look for, and there are some seasonal events as well that we want to look for. So let's start with the earnings first, and what's going to be upcoming this week as well as next week that you want to be aware of. One of the first ones is a company called FNSR or Finisar, and it is a historical 100%er, as I recall, on Best Choice, or excuse me, 90%er, and with some really good consistency, except for last year, of course, in price movement. And that's one of the things I look for on Best Choice is, not necessarily point movement, because price can change from year to year, but consistency and percentage movement is important. It means it seems to be repeating every year in a nice pattern, and so we can kind of expect this. So it is a 90% probability. The earnings are coming up this Thursday before market. So if it's something you want to look at and you've analyzed and feel it's a trade you want to take, you'd have to position yourself in Wednesday. The target price for this, based on historical percent move, is $22, which, again, it's not going to go and fill the gap, which is what looks like it's going. It's meandering sideways, and typically it missed earnings here, but typically does well in the September earnings. and it eventually will want to fill that gap and get back up into that 24 area, but that's not where the target is. I'm expecting it to be kind of in the 22 area. This isn't a high probability trade, but if you go look at the earnings, the strike prices and the options, you're going to see a lot of people loading up at the 20s, and you see some good volume at the 22s. And I'm always looking for a delta of at least 20 or higher, 0.20 or higher. I never will take a trade with a delta less than 0.20. It's something I learned from Dave McMullen, a very successful trader out in California, manages a big hedge fund, and that's one of his criteria. So we had some good volume today, which indicates there's a lot of interest in that area at the 22. And, you can pick it up for cheap, for 22.5 cents. And based on a stock that closed at $20.31, you're looking at a 1.2% premium. And that's what we want to do, is have a premium between 1 and 3% and buy cheap options. Okay, some people have asked me to slow down a little bit. This is the first time that they're on this, and they need to do some catching up. So please forgive me. I tend to blow and go here, and it tends to be. And I'm assuming that most of the people on this webinar have owned Best Choice for a while, are familiar with the icons and how to navigate the software. These webinars really are not designed for learning the basics. I kind of want to say that if you're interested in doing that, please reach out and contact me afterwards. And I have material that can help you to get started on the right foot on learning the basics and so forth. So just keep that in mind. Most everybody, I think, on this call understands the basics. So now one of the things you can do when you use the delayed option chain with Best Choice, there's some interesting buttons to use that kind of helps you analyze and determine what potentially could be my profit. Now, one of the things is you could say show targets. It's a neat little button that I haven't gone over in a long time, but in essence, when you first click that, it's asking you to input a stop, as if you're buying the actual security. You just want to put something underneath the last closing price. You can just put in 20 for this example because the stock closed at $20.31. Okay, somebody asked, they really want to learn how to use the filters in the King properly. Okay, we can talk about that here in a little bit. So you could put in 20, something underneath the last closing price, and then you put in, what do you expect the stock to go to? Well, again, that's determined by using that historical percentage off of the seasonal chart and applying that to a closing price. That gives you a target of where, on average, the stock can move to. It could be more, it could be less, but it gives you an average and a target price to shoot for. That, along with linear regression, the last high, and other techniques will reconfirm what that particular target is. In this situation, I've already done the math, happens to be 22. So when you do that, you will tend to see what the profit is or loss is if it goes to that particular strike price based on where it's at currently. So if you're choosing the 22 at the Septembers, it doesn't look good. Based on the current Greeks and the time value that's involved, it doesn't look like a very profitable trade. So you can keep that in mind. Again, that's a snapshot based on the current situation. That's not an end-all, be-all. Okay. The key is if you're paying 22.5 cents and it goes through 22 cents because of a move based on positive earnings this Thursday and closes above that by expiration Friday, you want to take your profit off the table. Okay, so that's one trade that's coming up. The next is a company called Cooper, C-O-O, Cooper Companies. And you can see the trend is up. One of the things you can also do is when you go to a one-year chart, you can click the toggle switch to see what kind of earnings this company is doing as well, and earnings growth, and see if it's producing good quality earnings. And if not, then it's something to be aware of. Anyways, this company is doing a real good job of price increase here, especially look at 2 years, just continues to go up. And it's got some good consistency. And, you kind of have railroad tracks here supporting price, even though there's a little bit of divergence in prices going up. But when you look at things seasonally, boy, I mean, you see a real pop. And 10 out of 10 years, this company just shoots up after earnings. And earnings are coming out this Thursday after market. So if you look at that 7.8% and you apply that to the closing price where the stock closed at, I did this as of last Friday, so it may not be accurate. Well, it's real good. See, this is typical that you see with a stock. There's consolidation, and that happens. The stock's going to kind of meander sideways because there's an unknown event coming up. There's the earnings. But, one of the advantages we have with Best Choice is to have this seasonal chart. I mean, this thing is really incredible because it just keeps performing year in, year out, year in, year out. And there's some real power to that. And knowing this in advance that, hey, 10 out of 10 years, this company has done well on their earnings release, is powerful information to have. So when you go to the option chain, and let's see, what was I looking at? The 165s, the SEP, I think I put down the SEP's 165s. Where did the stock close at? 162. And you see that you have a bid ask of 4 to 460. I think the strike price that I was looking at, and again, I'm going to just quickly go through the math so people see how I determine that. If you take 7.8 and you input the last closing value of the stock, and you multiply that by the historical average that you expect the stock to move, it'll give you a target price. So the target is actually 175, 174 when I did it as of Friday. So, you can make a determination whether you pick the 170s, the 175. I picked the 175s because that's where historically I expect the stock to go to. It's also paying about 1% premium. That's where I have a lot of good open interest as well as volume. Now, another strategy is to do a bull call spread, or what's called a vertical on this, where you're buying the, I think I did the 165, 170s. Let me go to Thinkorswim and take a look at how that looks like. Okay, so here is September's expiration. The stock closed at 162.99. When you're doing a $5 spread on a vertical, you want the stock to close or be above the strike that you sell on a vertical. And that's ideal because then you're going to collect all the difference. There's $5 potential profit in there, but you got to subtract what you pay. So if you look at this vertical and say, okay, I'm paying $2.60, I could then potentially make $2.40. Now, it's not ideal. Normally, I like to make at least a potential 100% return on the profit. So, generally, though, I like to buy where there's some intrinsic value already built in to the call that I'm buying, and you're buying the bottom end, the 160s. So, you know, I like to see some intrinsic value. I've got $2.99 value intrinsic built in there, and I've done enough of these to see this work out very, very well. So even though it's not as much profit, I'd be willing to pay $2.60 for a potential $2.40 profit on that vertical. Now let's see, that's buying the 160, 165. Now you could, if you want, since this is almost 163, is pay less premium and buy the 165, 170s. Now remember, what is our target? Target's 175. I mean, that's where we historically expect the stock to go to. Now that's a big move, folks. That's a, you know, a $12 move on a stock. Could it do it? Well, it has this historical potential. So if you want to play it a little bit, you know, more conservative, do 160, 165. You want to perhaps have a little bit more profit, take a little bit more risk, do the 165, 170s, and that way you only pay $1.50. You know, now you're maximizing your potential profit. You know, if the stock does really move, and before expiration Friday in September, that stock will close over 170, and it has a nice pull-up, then you're looking at some real nice return there. Okay, so again, what we're looking at is the 175s or 170s. I guess I'd be a little bit more conservative and probably pick the 170s, you know, for 205 to 275. Probably put in a bid cheap, you know, see if I can get filled. If I don't towards the end of the day, maybe I'll move it up closer to the mark and get filled. But again, I'm not paying a lot. You know, 1.5% premium, that's not a lot. There's low IV too. It's not like it's screaming at 60, 70, so I'm not worried too much about, you know, IV and getting crushed on that. There's only, if you look at the difference between at the money at the spot month of September and going out to October at the 165s, there's not that much difference. 26 to 33, talking 7%. It's not a lot. It's not a lot, so that's not something to worry about. Okay, I guess somebody couldn't get any sound, and so they're going to have to exit. Hopefully you can, Erica, listen to the recording and you'll be able to pick up some of the sound at that point. Hopefully everybody else can hear me well. And please speak up if you can't. Okay, let's go on to the next trade for this week, and it's Ciena, C-I-E-N, Ciena Corporation. And again, that is a, I believe, 100% trade, as I recall. I had it as 100%. Ciena, let's, I'm sorry, no. This is a low probability trade, folks, but here's the reason I put this out there. They're a networking company, did some fundamental research, and they produce switches. And they just signed a large contract with, I forgot the name of the company, but this particular company has won a contract in China. And evidently, Ciena is going to be doing a lot of work for them, and that's going to bring in a lot of revenue. So I'm pretty sure that's going to be, you know, announced in the conference call in their earnings report, which is this Thursday after market again on the 4th. So even though it's only 70% probability, other thing I saw is some big double-digit percentage moves over the last 5 years, barring 2012, which, you know, is indicative this company is doing well over the last 5 years. You know, the time before that, it wasn't doing so well. You know, so I am weighting a little bit the historical percentage average to the last 5 years and saying, hey, based on the fundamental news of them working with this company in China and the fact that the last 5 years this thing moves quite well, then that's the reason I'm talking about. Average move about 6.82%. If you look at this, you know, it's got to bust through that 200. You see it tried it here back in June. It didn't. But we do have a 8 crossing a 20, which is a trigger. We do have a positive MACD. You can see that. I should probably try to expand this MAC a little bit so you guys can see that. So it's kind of alligator opening mouth. Today, I guess it went down a little bit, but not a lot, 3 cents. So again, you're going to have some consolidation before earnings. So target price on this, on Sienna, is I'm expecting also, I guess, a 22. Which would bring it right up to its last highs right in this area here. And when you look at open interest for September, I chose the 21 strike to give myself the benefit of the doubt. You could pick that up for 74 cents, 72 cents, which is 3.5% premium. However, one of the things also I looked at is the fact that, let's see, I don't know if this is a candidate for a calendar spread because you see a tremendous annualized premium. This is something I learned from Pete. It's a great strategy that you can do also. Let's see what January's annualized premium is. If that's low, wow, there you go. That's the other reason I brought this up. If somebody, and this is the strategy Pete's been writing about, folks, in the monthly newsletter, and it's something I picked up on and I like, and it produces a lot of good returns, and it's a low-stress trade that you don't have to micromanage a lot, and that's buying a leap or, a next year option, January specific. That's what we're looking at here. I'm sorry. I should have gone to 15. There we go. 20.42 is what the annualized premium is that you'd be paying to, and it's only $2.72 for that 20 strike. But then when you go to this front month, what is somebody paying for that? And that's 101%. The difference between those, 101, and I'm sorry, 25, that would be January 2015, which is 75% premium. And you could see where tons of people are loading up. There's 14,000 open interest there for $2.11 that you could pick up and sell the front month call for $1.17. And when you look at what that actually comes out to be, as far as what you're paying, it's ridiculous. I mean, it's a good deal. Here's the January. So if we bought the Januaries at the money for $2.11, and then we sold the front month, which we saw the annualized premium that somebody is willing to pay is 101, which is just ridiculous, for $1.17. It's going to offset our cost of buying that anchor out in January. So we can press the control key and then sell that call. Oh my gosh, for 93 cents, I can be in January's 20s strike price for, 3%, 4% premium. It's cheap, very, very cheap. So that's another strategy to be able to do on Sienna, which also will mitigate if the earnings aren't so good. Okay, if for whatever reason Sienna misses, then you're not going to get stung as bad when you because this anchor will not erode so much. Remember, there's two parts to an option. Like Pete has taught me, there's intrinsic value, and that's just simply the difference between the option price and the stock price. And then there's time value. And time only moves in one direction. That we know. So, you look at this and you say, well, geez, if this stock over the last, let's say, 2 years, Well, it's been kind of volatile, but you see it's kind of, bottomed and starting to move back up. And again, if they have good earnings and bust through that 200, we're probably, talking off to the races. We got a positive. Problem that I see here, though, with that, when I look at this, folks, is I got, negative earnings on this company all across the board. So, something to be very, very cautious of, and, don't risk a lot if this is a trade that you do want to do. All right, let's move on to the next one. This is a company called Five. Not a lot of history, folks, but this is a fantastic tech company. You got 2 years of pretty big growth. Do some reading on this. I did. It looks very, very bullish from many standpoints. One of the places that I go to determine, it's just it's not a definitive or this is a make it or break it, but this gives you some idea of what, the people who are in the know track and think about the company. They were just upgraded here recently by TheStreet.com, which is Cramer's site. If you look at the analysts that follow this, you have 8 with a strong buy, 1 with a moderate buy, only 3 hold. So, the people that follow this feel very positive about this company's growth as well. So, this is just a little bit more third-party information that gives you the confidence either to make and move forward with the decision or choose, perhaps not to. Strike price that I looked at on this was the SEP 40s. Let's take a look at what that looks like. And there it is. Now you're going to pay some premium, but because this is a new company and 2 years worth of history, I'd be willing to, now again, 21.84% move. The stock closed at $40, $5 move to pay, to get into the, where did this stock, what did it do today? Hold on, because I may have, stock may have gone up today. Yeah, it's gone up. Oh, this is what I was looking for, is it closed above the 200. And all the moving averages are moving up. I've got an alligator mouth. Again, one of the things I look like, I learned this from a good friend of mine who trades the weeklies. He looks for that alligator mouth movement where everything is pointing upwards. Stock closed again above the 200, which means if it breaks above that, it's going to continue to go. And it closed at, let's see, $40.60. So the strike level I was looking at is the 45 because I'm paying very little premium, about 70 cents if I get the mark, and that's about 1.3% premium. So you could say to yourself also, what if it goes from 40 to 45? What kind of profit could I make potentially? And if you look at that $5 move based on a strike price, well, gosh, I guess here we are at, I don't know why this says at the money is 17.5 because it's not. At the money is actually 40, so we're looking at 187% return based on a $5 move, which is not a bad profit. Okay. Again, the other would be to do a bull call spread on that. Or what people like to call as a vertical. And I would again pick, I'd pick probably the spot month because this is where all the volume is. This is either going to be a make it or break it sale. And you want to do, you want to do at the money and then one strike out, $5 strike. So, there's $1.70, which means you have $3.30 potentially you could make. That's, you buy 5 contract, that's $500. You have the potential to make, $1,500 on that. So if the stock bounces and closes above 45. Okay, and 5 is coming out Wednesday, the 10th. So that's next Wednesday, the 10th. Okay, let's move on to the next stock. That's one I'm sure people have talked about it a lot, and that's Ulta Salons. I have some concern, and that is only because of the short. Now, historically, this thing looks like a flipping home run out of the park. I mean, look at that. 6 out of 6, 20% move. I mean, it looks really great. You look at where it is historically based on its, the composite. Looks like it's poised to do what this year did, just explode up there and do well. And Ulta has just cornered the market in regards to the salons and cosmetics and shampoos and one-stop shopping. They've just done a great job. Yeah, and okay. So one of our members brings up what is the open interest on this thing, and it's huge. There's a lot of excitement on this. See, one of the things that I guess concerns me. Okay, there is no Novembers, Bob, for ULTA. Now, I don't know if that's what you were talking about, but ULTA does not have November expirations. It jumps to December. But one of the things, you look at open interest here, it looks pretty good, right? And the strike that I was choosing is the 105s. So 165 by 190. You can see that's where there's open interest, and that's also, you can see where all the volume is today. Okay, and that would be a nice move, about 12.5 bucks up. If it closes over that, you'll definitely make some money. One of my concerns, though, is this right here. I see a lot of short interest for some reason, specifically at the 82.5. I don't know why, but it's just something to be aware of. I don't know if that means that some people know what's in the know. Something to be aware of. Okay, Bob made a point that there was a lot of open interest for November. Okay, for the previous. Oh, there you go. 13,797 for November's 40. So, guys, that tells you something, right? People could be buying the Novembers and selling the Septembers. I mean, that's possible. You could do that. You could buy, this is on this company 5 again. You could buy that 40 and sell the spot month for $1.05. It's a $3.60 ask price to be in the November 40, and you could be in that November 40 for $1.05. And that call hopefully would just expire worthless and not be called away. So, but that's a very good point. Thank you, Bob, for bringing that up. I didn't look into February's. I guess February's is too far out, but a lot of excitement for at the money for this company 5. Back to ULTA, and just be aware of that right here. But the strike I was looking at was 105. Or, let's see, I think I was doing a calendar spread for ULTA. Let's take a look at that. Okay, there it is. The spot month, October, the annualized premium is 89, okay, for the 97.5 at the money. So somebody's willing to pay that kind of premium annualized to buy that 97.5. That is what the current cost is. So if you go out to the January's 15, that's only 20. So okay, so let's call this 21, and let's call September's 90. Let's subtract 21 from 90. That's 69%. It's huge. That's huge. So, you could get into an $8.40 ask price for at the money on a great company. I mean, let's stop for a second and take a look at this company over 2 years. Their earnings are just, going up. They they just keep screaming upwards. This is a good growth company. So now, they screamed here, and I guess they really got hit here on their third quarter. Went from all the way from 129 down to 99. So, but it is a great company. It's got great management, and it's making hand over fist and money. So a calendar spread would be the other way to go on this. And what I'd be looking at is buying at the money in January. $8.40, and then sell the at the money for September. So for $3.05, which is not a lot, that's 3% premium on a $98 stock. Okay, it's not a lot when you're going all the way out and buying that much time into January. And one of the points I'm going to reiterate is Pete found a company similar that had great growth back in April on these calendar spreads that he did, and he paid like $7. This price, in other words, here was $7 for at the money. It's a company called Bida. And, that thing is all the way up to $63 in the, and what he learned, quickly learned is, of course, the delta's 1-for-1, and it starts to act a lot like a stock, which is not a good thing. So he pulled some money out just to get buy another strike, which was a smart thing to do. Okay, so that would be the other strategy on ULTA. ULTA is coming out 9/11, which is a week from this Thursday. The last one for earnings is a company called Lululemon. Good old Lulu. And that's coming out 7 out of 7. Great consistency over the last 7 years. Average move about 18.26%. If you look at this here on a 6-month basis, let's look at 3 months. You got a crossover of the 8 to the 21. The 8 and the 21 has now crossed the 50. This is on a 3-month. Let's look at a 6-month. So yeah, it's been meandering sideways here. You can see the sideways pattern. But one of the things it did is it missed earnings back here in June, and so it almost filled the gap right here, but didn't. Normally the stock wants to gravitate back up to where that last closing price was when you have a gap like this. So, but based on the historical move at 18%, based on the closing price, I picked a strike price I wrote down of 42.5, the 42.5s of September. And did this stock go down or up? Okay, so I guess it went down 66 cents today. So it was at 40.5. So 42.5 was what I was looking at before, but that only gives me a delta. So it would have to be the 41s now, not the 42.5. So I have to switch that because price changed. And so did all the Greeks. So I'd be looking at 41 for, oops, this is November 5th. I'm so sorry, folks. No, 42.5, I'm sticking to it. My apologies. I haven't worked this option chain, so I had to switch to the spot month of the monthly expiration, not the weekly, because this stock also trades weeklies. So you can see that's where, folks, the open interest is. Lots of good volume today. It's a 96 by 105. So again, not a lot of premium you're paying. It's got a 33 delta. So that's the strike level based on the historical percent move I expected to do that I chose. Again, this is one that I said you could do a calendar spread on, evidently. And I guess, let's see, the 20th. Yeah, look at the annualized premium of $100.27 versus the annual percentage. This is annualized percentage of what premium, what somebody's willing to pay. So let's look at the January's. So remember, that's 100. January's is 25. So hello, that's 75%. Another candidate to be able to do a calendar spread on, which again is a lot less risk. Okay, so that's the earnings that I saw coming up. Now let's go to just seasonal trades that are historical. There's CRM. That's coming up here in September. It's 10 out of 10. It's a 100%er. And when you look at where's it at right now, well, it busted above the 200. It gapped up above the 200 here. Very, very important. And it's maintaining that. And today it had a positive day of 76 cents. So you say to yourself, well, where is it going to go next? Well, next it's going to probably shoot for that last high is where it potentially could go. But if you want to do the math and you say, okay, based on best rating of whole zone, it's going to move an average of 10.6%. Take out your calculator. Say, where did the stock close at today? Okay, the stock closed at $59.85. So 59.85 times 1.1006, 10.6%, gives me my target of 65. So I conservatively chose the 62.5. Okay, I'm sorry, I got to go to CRM. CRM, and let's go to, oh, come on now. CRM. Well, it doesn't want to give me that, so we're going to go to TOS. Okay, September's, you can see the 62.5, 23 delta. That's where the majority of volume is, and that's conservatively instead of 65. 65 is too far out, too low of a delta. Nice open interest, good volume and open interest today. So, and you can pick it up for cheap, folks. 44 by 46 is less than 1% premium. Okay. The other thing, of course, you could do is a bull call spread. I did this. I looked at September 59 by 64. So that was when it was still in the 59. So we'd have to look at. I would probably do. Well, let's look at what it is right now. 59 by 64. That's a $5 spread for $1.63. And again, why did I choose the 64? Because that's underneath what I expect my target to be of 65. Okay? So another strategy would be to do a vertical on that to 59.64. Okay? Any questions so far as I'm going along? I don't see any comments or questions. Any thoughts? Everybody see what I'm doing here? Everybody on board? Somebody give me an okay, please. So I know you guys are okay. All right, good. All right, let's go on to the next trade. So CRM. I'm sorry. I did not do September's. My apologies. For directional, I am always looking to buy some time. So I did the 62.5s for $1.21 by $1.25, which is still only 2% premium. That's the one I was looking at for $1.25, October 62.5s. But for the bull call, I was doing September because I expect the move to be right here, 10 out of 10 years. Because if I look at the this part of October, well, I have some years that didn't do so well. So the big move is right here. You see, right up to the 19th, which is expiry Friday. You know, and then you know, here I don't know. I mean, there's a short 70% probability. So why would I want to historically put those things into my basket, buying October's on the call? Now, I'm willing to do that only because I don't know when this thing is going to take off for October. I like to buy some time. Okay, that's why I chose October 62.5's call for the directional on CRM. Next trade is Delta Airlines. Now, this is a great trade also to do a counter spread. I chose the October 42s on this. And again, if you take a look at it, it's a 7 out of 7 here coming into September. You can see where it's doing a little hook here for 2014. Kind of following that composite a little bit, pulling down right here towards the end of August. And then coming into September, historically, that 7 out of 7 year pulls up with an average move of about 13.5%. So if you look at DAL and look at a lot of excitement about this company, you can see there's tremendous open interest all over the place. Bear with me 1 second, folks. I'm going to have to put you on mute here. My apologies. Cannot read the indicators. Please identify them. Okay. When you say indicators, are you talking about, Greg, on the charts here, or what in particular? Which indicators are you? Be more specific, I guess, when you say you cannot read the indicators. Oh, the TOS charts. Okay. The TOS charts. Okay. I guess I don't know which indicators because I'm really just looking at the option chain. I mean, if you're talking about the various graphs that I have, I am going to talk about those because it's ways to monitor things that I use once I'm or getting into a trade or looking at things. I guess I could quickly go over that. One of the techniques that I like to use when it comes to charting is I always like to look at a macro picture first. Again, you can see this is what I talk about an alligator, kind of opening here. I always like to look at the macro picture. And so I use a 2-year monthly, 1-year weekly, and then 6-month daily. This is the macro picture, but then from there, I'm going to take it down to there's a 10-day hourly, 15-minute, I'm sorry, hourly, 15-minute, 5-minute. And again, I'm looking for things that are positive and open alligator mouth, and as long as price stays above my indicator of a 21 EMA, I'm going to stay in the trade. And then I'll finally, get it down to, I'm really looking to fine-tune my exit. It's going to be a 5-minute and a 3-minute chart. And again, I'm using Heiken Ashi candles. I don't want to get too much into the technicals of my chart setup and everything else. Feel free, guys, to email me or call me. I'm very open book when it comes to this stuff. There's nothing proprietary that I'm holding here. So, if you guys want to get more involved in charting, we can do that sometime. But I have some more trades to go over, and I've already been going for almost an hour. So I want to get through the trades. So, Greg, feel free to email or call me, and I'll be glad to discuss those with you. Okay, so Delta Airlines, I mean, just a great-looking company. They're great to do a calendar spread on as well. I mean, take a look at a 2-year track record on this thing. That's fantastic. I mean, look at the price and earnings consistency over 2 years. This is the kind of company you want to find to do calendar spreads. This is perfect. Low volatility, right? There's not a lot of big wide width to the band. I mean, that 200 is right there. Just continue to scream up, and the earnings continue to support that growth. So, and you look over 1 year, it's even more evident. I mean, that's just, it's fantastic. Again, when you see this kind of price or earnings consistency on a stock and the low narrow bands, it's a perfect one to do a calendar spread on. Now, because this is also a seasonal trade, you can make a quick pop because you expect a quick move here. 7 out of 7 years. Now, if I go to best profit per trade. I'm sorry, you could do best rating a whole zone, and it'll still show you the 7 out of 7. But if I change tab 3 to best profit per trade, and I highlight this whole area, well, guess what? It's still, there's only 1 year it missed, and that was 09, and it didn't miss much. So, and in September, it went up. So you may want to take advantage of this this move here on a directional with a 13.51 average move. So let's take a look at the volume here, and I think I picked out as of yesterday the October 42s looked appealing to me for $1.46. You know, look at that, folks. Now that's something you'll look for. You know, I mean, these are things that when you're looking at an option chain that should just jump out at you and be like a 2x4 that smacks you in the head. Whenever you see volume double what open interest is, somebody knows something. Right? I mean, somebody knows that this thing, you know, is obviously going to do well. So, hold on 1 second, everybody. Okay, I apologize about that. So, anyways, great company, good move, and these kind of things right here. I mean, you can even look at the January. Look at January at the money, 15,612 open interest. You know, so if you do a calendar spread on this, and you buy the at the money, and you sell the at the money of the front month. Well, it's actually at the money is almost 41. So let's go. See, the problem is that you don't have a 41. Oh, no, you do. You do. Let's do that. 41, and let's sell this call. You're into that January 40s for $1.30. Okay, you're into a $3.25 normal premium for almost 1/3 the cost. Okay, on a company that is just screaming upwards and great consistency in price and earnings. This is the kind of thing you can make money on, you know, and collect all that premium, sit back. You don't have to micromanage things. You don't have to watch the computer every day. You know, this bodes to a lot of people's personalities, you know. But at the same time, you know, I like to have some more action. So, you know, that's why I also talk about some directional trades, take advantage of this 7 out of 7, and perhaps a quick pop. Hey, you know, if I can come in and buy a cheap option, you know, like I put the October 42s, let's see, again, $1.42, $1.45, great, you know, and again, this just strengthens my thought that this is going to move because there's almost quintuple the volume today of what open interest is for the at the money. The stock moved to $1.35. The strike price I was looking at almost doubled. Okay, so that's Delta. That's a really great one to look at. Another one is MELI, M-E-L-I. It's another one that moves here in September. 7 out of 7, great consistency. I mean, look at that consistency and percentage move. Love to see that. Love to see that it's double digit, but it's got a good point in percentage movement at this time. Where is it sitting at now? Well, closed above, gapped up and closed above the 200 and just keeps going. Look at that, how it just follows that red line, which is an 8 EMA. Just continues to go above that. And, you know, as long as it's above that and doesn't close below the 21 EMA, you know, this is a trade to, now, be careful, you got a MAC that seems to be overbought and coming down, but we also know that when you look at this thing on a yearly basis, you know, this thing could eventually come and close the gap between here and here, and we're talking 134. I had a target price of 128 for MELI. okay, based on the historical percent move I expect and the closing price as of last Friday. The strike price I was looking at that I wrote down was the 120s, and that is October 120s. Now, that's a concern I have right here. I'm sorry, this has to be September 120s. The reason is because of this right here. I just don't have enough open interest. You know, I mean, if everybody on this call went and bought one contract at the September 120s, which, you know, actually I'd probably now move it to the 125s because the stock has moved. No, I guess I'd still do the 120s. Because you think about that. What premium am I paying? Even if I got it for $3, what is $3 of $115 stock? 2% premium? Yeah, it may be a little rich as far as cost goes, but that's, you know, you don't want to go too far out of the money, you know, and the stock just doesn't move, it meanders and doesn't quite do the big move you expected. You know, I don't, you know, $10 move, I don't know. $4.50, $5 move? Yeah, I can expect that, or I can anticipate that based on this 11.82% average historical move. You know, it's 7%, 7%, 4%, 4%. You know, I mean, if I took those 4 years, added and divided by 4, I'm coming out with an average of about 5% move, okay? And so, you know, if I did a 5% move on a stock that closed at 115, well, you know, now we're talking about a $7 move. But $7 still puts me above 120. But my concern here is that there's, you know, if everybody on this call went and told 4 people, we'd have more people just from this call buying that one contract at the October 120s than there is total open interest right now. So that's why I'd be looking at the SEP. That's where also you have nearly the most open interest, and you've got a delta 29. I didn't see any other type of trade on Melly besides a directional. Okay, let's go to the next stock, WAC. Again, good-looking trade, folks. This is all happening right now. 5 out of 5 years. Great point in percentage historical move. Where is it at right now? Well, it's kind of got a downtrend, so it's something to be leery of, okay? If I go to a year, though, you know, again, this is something I didn't like about this company. It's been in a downtrend move, you know, but we could potentially play the pop-up back up to here before it comes back down. And I do have an open mouth. If you look at the MAC here, you see how it's kind of open mouth coming back up from being oversold. I do have an 8 crossing the 21, which is a normal trigger. So, you know, you go by the historical 5 out of 5 years. Again, it's not 10 out of 10, folks, okay? But you also look at where is it at compared to all the other years on the seasonal chart. It's way, way down here. It's way, way down on the bottom of the lowest the stock has ever been to the highest the stock has ever been. So historical precedence says it should go up right now, okay? And if you look at open interest and volume on this, not something to get real excited about. So I looked at the, what was it, the SEP 30s, I think I was looking at. No, that can't be right on this company. I was doing this late last night, so these figures are not accurate. I guess to be conservative, you know, I'd probably do the 27s, only because it's very inexpensive. I've got decent enough open interest. Oh, there's some volume right there. That's what it was. It was December. I don't know why I put October. Okay, sorry. Okay, that's what I did. I said, okay, this stock is declining. right? I mean, this is how I looked at this thing. This stock is declining, not looking real good, okay? When I look at its earnings over 2 years, looks fantastic. Obviously, over the last year, they started to make big money. So there's divergence between price and earnings. And statistically, that means over time, price, if they continue to make money, price will catch up with earnings. So I figured if I bought time, that would make sense. And so when I was looking at the different strike levels, I said, this is what I saw is the 1148 with a delta of 32. I could buy it for pretty inexpensive. Let's say I picked it up for $1. Okay, that's still only about a 3% premium on a $26 stock. So it was the December 30s I picked out on WAC. Next is Blackstone. If anybody's ever heard of Blackstone, it's BX. This is also a great candidate for a calendar. They're a hedge fund. They are 7 out of 7, good historical percentage. And I picked, and if you look at where they're at, they're just screaming, right? Great price and earnings consistency, divergence between earnings growth and price growth. That's great, right? It means the stock is undervalued. You got the 200 right here. It's just never busted below the 200. Great growth company. Let's take a look at their what somebody is willing to pay as far as a premium. Annualized is 37% for the monthly expiration for at the money. And let's go to January. January's is 13th, so not that great of a profit. Okay, you're looking at the difference between 27 and 13. What is that? About 14%. Still, 14% in 1 month. I take it all day long. Look at the volume at 35. Unbelievable, unbelievable. But you always want to pick out the money. Okay, so Blackstone is, I picked the September 34s right there for 40 cents or less, about 1.2, 1.3% premium based on the closing price of $33.53. Calendar spread, January 15, let's say I did the 34s on a calendar spread. So you buy the January 34s, you sell the September 34th. So your end of the January is for 99 cents. Okay. Next is UAL for a seasonal trade. Once again, 8 out of 8, great historical percentage move. It's definitely in a bullish trend right now, closed above its 200, you see, so it's upwards. Definitely a bullish candle today. Got a semi-open mouth MACD, which I like to see. Kind of tried to close, but still then pulled back up. So we had a nice bullish move today and a $2 move. I was looking at I think I looked at SEP 50s. Yeah. 34,000 open interest with 7,800 volume today. Great, great looking trade. Okay, folks, it is 10 minutes after 8. I have a question for you. I have 1, 2, 3, 4, 5, 6 more seasonal trades to go through. I could just email them to you. It's going to show you expiration month, strike price, and alternative strategy, be it bull call or calendar spread, with what I looked at for strike prices based on Friday's close. It also talks about BCS probability, as well as the BCS target price of the historical percent move I expect. Rather than drag this on, I think I'm just going to go ahead and email all this to you. These are typical suspects: Amazon, Lulu, Baidu, MasterCard, Google, and CME. These are all 100% historical moves happening now to the middle of the month. So you'd be looking at SEPs, and then you'd be looking at bull call spreads or calendar spreads on them. Okay? So is an email okay? I've got 2 people that said yes, I need to hear some more from you guys. If I put this on an email to you right after this, would that be okay? Because I don't want to. What happens is the longer I go with what's called power usage through Citrix GoToMeeting, the longer it takes to render the video. And based on right now, it's going to take about an hour and a half to render this and about another hour and a half to upload it to YouTube. But once I do, I will send you the link of how to be able to watch it, recap it, take a look at it, but you will get the email right away. So with that, folks, I'm going to wrap up this particular session. Next week's session will start at Monday at 4 p.m. Eastern Standard Time. Okay? And I'll send a note about that to everybody. All right? So thank you for attending. Good trading, and I'll look forward to speaking to you guys next week.